If you want to become smarter than Wall Street, keep watching. Welcome back, everyone. It's me. Here's what you missed in the last 5 minutes. Major index highlights. S&P 500 sector performance. Energy and materials were today's leaders, each advancing about 2%, while consumer staples lagged behind with a 0.1% dip. Year-to-date, however, tech remains the top performer with a 41% surge, followed by discretionary and communication services. On the flip side, energy and utilities are down for the year. What drove today's market action? Let's start with a bang. 1. Banks rally after passing stress tests, signaling stability. The results from the Federal Reserve's latest round of stress tests showed that big banks like JP Morgan, Bank of America, and others would remain profitable even under tough economic conditions. This positive news boosted financials and bank shares, leading to a broad market rally. 2. Tech giants Apple and Nvidia, lifted by AI focus. Apple unveiled its new large language model called Apple GPT. It's an upgrade to Siri, and announced plans to integrate AI across its product line. Nvidia was also in the spotlight, as investors saw it as a key player in AI infrastructure. Both stocks rose around 3%. Let's turn to individual stock movers for more color on today's action. In our lead story, Goldman Sachs rallied about 2.5% to fresh highs, after it aced the Fed's stress test, signaling strength and resilience in the face of adverse economic conditions. CEO David Solomon emphasized confidence in their stress capital buffer, suggesting that the firm can navigate challenging times while continuing to support clients. Meanwhile, other major banks, including JP Morgan, BofA, Wells Fargo, and Citi, also advanced on the back of strong regulatory and earnings signals. This move follows Monday's 13% surge triggered by their AI-powered investment offering, reflecting a positive outlook for the company. This initiative reflects the company's growing commitment to AI research. And finally, Moderna climbed on positive late-stage data for its mRNA flu vaccine, showing high efficacy against multiple strains of influenza. These tech giants have added approximately $4.7 trillion in market cap since April alone, driving broad market rallies and defying conventional wisdom that suggests it's unwise to chase performance. Deutsche Bank's Jim Reed cautions that traditional 60/40ths portfolios may face challenges and suggests alternatives like 60/40ths, growth tilt portfolios, or 40/60ths portfolios. Others like Paul Nolt of Kingsview Investment Management are neutral, citing fair market valuations and expecting modest single-digit returns for the rest of the year. Their success is attributed to several factors, including strong earnings reports, solid guidance, growing cash flows, robust balance sheets, and a favorable interest rate environment. Known for his ability to accurately predict market moves, Gross recently revealed that he favors stocks, particularly those related to AI over bonds, due to what he terms a little bull market for equities and a looming big bear market for bonds. Nvidia is scheduled for July, followed by Tesla and Microsoft in the subsequent weeks. While there's no guarantee of renewal, the situation warrants attention, as any change could impact markets. If demand holds steady or increases, bill yields may drop. Alternatively, if demand weakens, yields could rise. Volatility could persist until the July FOMC meeting, when bill supply is expected to stabilize. His reasoning centers on central bank actions, which he believes will push bond yields up and decrease bond values, impacting fixed-income investors. Morgan Stanley's Mike Wilson highlights these companies' importance in the context of the upcoming July 9th tariff deadline. Now let's quickly go over what to watch in July, which will provide you with plenty of trading opportunities. Positive data could boost the S&P and drive yields higher. He emphasizes that if trade relations between the U.S. and China improve, these stocks may face headwinds as investors rotate into more economically sensitive sectors. However, Wilson sees continued upside potential driven by three main factors: earnings upgrades, expected Fed rate cuts, and resilience in the face of geopolitical challenges. His S&P 500 target sits at 6,504 year-end, and he maintains an overweight position on equities given attractive valuations in the broader market. Ed Yardeni, president of Yardeni Research, takes a slightly different approach, while acknowledging the Magnificent Seven's contribution to market returns. He points out that they represent only a small portion of the investable universe. Yardney is bullish on equities for the rest of the decade. The results bolster confidence in the vaccine's potential and highlight the company's progress in vaccine innovation. Also, Wolfspeed surged about 86% after filing for Chapter 11 bankruptcy protection, which provides for a more streamlined process for resolving cross-border insolvency cases. Despite this news, shares had already tumbled about 50% year-to-date prior to today's rally. JP Morgan and BofA both reported better than expected. Earnings with net income exceeding analysts' estimates by 6% and 12% respectively. Notably, all 10 of America's biggest banks passed the Federal Reserve's latest stress tests, and several analysts, including those at BTIG and New Age Wealth, upgraded their outlooks for the sector in light of these positive results. Next up, let's talk about Tesla, which fell about 4 to 5% in pre-market trading. The electric car maker faced regulatory scrutiny regarding its electric vehicle subsidies. An investigation revealed that Tesla had received more subsidies than rivals due to aggressive lobbying efforts, raising concerns about unfair competition. Despite this setback, Tesla continues to dominate the EV market with a 62% share of U.S. sales in the first 4 months of this year, according to Cox Automotive data. In other individual stock news, Robinhood jumped about 3%, after announcing plans to expand crypto services to all 25 million funded accounts. Meta Platforms edged higher after unveiling its new superintelligence AI division, which aims to develop artificial general intelligence. And now, let's delve into broader market trends, starting with today's top stories. The 7 best-known stocks in the world: Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta, and Tesla, collectively known as the Magnificent Seven, are soaring to record highs. Turning to a poll of 14 top strategists conducted by Business Insider, most see 5 to 6% growth in the S&P 500 through year-end. Although many acknowledge uncertainties such as inflation and geopolitical tensions, legendary bond investor Bill Gross, affectionately nicknamed the Bond King for his successful fixed-income bets during his tenure at PIMCO, is making waves again, but this time with an unconventional take. That concludes our look at today's top stories and expert insights. Big tech earnings. Microsoft, Nvidia, and Tesla updates will significantly influence market direction. 2. The tariff deadline on July 9th. Any policy shift could spark volatility. Legislative developments. Investors await updates on the One Big Beautiful Bill, which could impact renewable tax incentives and corporate growth outlooks. Economic signals. Friday's non-farm payrolls and inflation metrics such as PCE will affect Fed policy projections. Short-term Treasury volatility. T-bill supply will rise as bills mature. As always, be sure to check out my macro playlist for a deeper dive into today's top stories and more. Thanks for watching. See you next time.